So what's going on, guys? Rajan back again, and today we're going to take a look at Air Canada. So they announced another share offering, and there's a lot of people who are saying the stock's going to go to 50, 60, 70, $80, and I kind of just want to go through that and let you know what I think. So here's a comment I saw on Yahoo Finance. Thought it was pretty interesting. So with the acquisition of Air Transat, new cargo line, and potential new drones delivery services, as well as trimming of excess internal fat within the company, we could be looking at a $70 to $80 stock. This guy says he's a long-term investor, but he's only going to hold it for a year. Has 59 likes, 5 dislikes. So I just want to go through what he's saying and why I totally disagree with them. He analyzes the company up here, and basically there was a net loss of 685 million. You divide that by a 90-day period, you get a loss of $8.72 million per day. And basically goes on and says they have enough cash for 891 days, but what he did is completely wrong because he's using net income loss rather than cash flow, two totally different numbers. Kind of just goes ahead that basically summarizes that half the people on these message boards don't even know what they're talking about. So let's get into the video. So Air Canada announces price offering of shares. They basically sold more shares, so they're diluting shareholders. They raised $850 million. They sold shares at $24, and they issued 35 million shares. So basically what we're going to do is look at this guy's analysis and just give my own spin on it and let you guys know what I think. So we'll jump into the spreadsheet. So the spreadsheet looks kind of complicated, but it's actually really easy. So Air Canada currently trading at $23. Its all-time high was $53, and this is its adjusted price if we account for its shares outstanding, but we'll talk a little bit about that after. So basically cash and cash equivalents are $8.6 billion. You'll see that in the most recent quarter, but basically I just did the 7.7 billion plus the new 850 million that they'll be receiving. So debt also comes in at 13.1 billion for the most recent quarter, and these are estimates as well. And so net debt overall is going to be $4.5 billion net. And it's actually down because we took in more cash, right, from the new share offering. And the change in debt is going to be 43% negative because we're taking on more debt. Because if you look at 2021, this can basically be any quarter because these are kind of just estimates, or for the year ended. So 2021, 2020, whatever you want to call it, is $13.1 billion in debt. 2019 was $9.2 billion in debt. So we increased our debt by 43%. This is why people and all these analysts are calling these zombie companies, just because they're taking on so much more debt and their profitability is going to be hurt in a big way. So shares outstanding, this is a weighted average, are 332 million. So this is not a number I made up. This is 297, which is the most recent quarter, plus the new shares that they got, right? So 332 million. Previous year, they had 268 million. Right, so earnings per share were $5.54 for 2019. Okay, for whatever year you want to call it, 2021 or 2020. I'm not going to try to come in and estimate what revenues or profit or EPS is going to be for 2021 because really no one knows. If somebody tells you, oh, this is what Air Canada is going to do, if people like Stefan are telling you it's going to be a $70, $80 stock price, run the other way because no one knows. All these analysts are lying to you if they're giving you estimates. So, but what we can do is we can use previous years to try to come up with their best case scenario. And that's what I'm actually doing. So net income for 2019 was 1.476 million reported by the company. And basically what the basis of my argument is that if we use this 1.476 billion in the best case scenario, we're not going to come up with this $53 stock price on a fundamental basis, like on maybe a day-to-day, week-to-week, yearly basis. But when you're a fundamental investor, you're looking 5-10 years out the road, you're not going to come up with this number in, even what Stefan's saying, in the next year. It literally makes no sense. So this 445 is calculated by 2019's net income. So I'm basically saying that 2021 is going to have net income of 1.476. I don't believe this, but let's just use it for argument's sake. This, like, I honestly don't think this is going to happen. So 1.476 billion divided by 332 million shares outstanding. So this is the shares that were previously in Q3 2020 plus the new shares that they issued, okay? And under that scenario, we get $4.45 per share. And 2019, we had $5.54 per share. So you're probably wondering, if you don't understand accounting or these reporting methods too clearly, basically what happened was we're using the same numbers, but the shares changed. So each share, because we issued more shares, each share has less net income with it, basically. So year over year change in EPS is negative 25%. Okay, so between 2019 and 2021, let's say, our EPS, even though we had the same net income, the earnings per share dropped by 25%. Okay, and this is where this adjusted number kind of comes from on a fundamental basis. So you take this $53, right, and you take it by 75%, because 25% we lost basically because we issued more shares. So also just quickly do this again. So $53 times 0.75 gives you around $40 per share. Okay, so that's on a fundamental basis. So in the short term, anything can happen, right? So if I just show you, if you go back to Yahoo Finance, yeah, Air Canada traded at $27, $28, $29, almost $30, right? On a short term basis, really anything can happen with Air Canada, or really any stock, because the stock market's irrational in the short term. But in the long term, in the long run, fundamentals matter. So under the best case scenario, we get a share price of $40. And this is where like these arguments really break down, where people are saying, okay, we're going to $70, $80 stock price. The company's diluting you, so your shares are basically getting less and less valuable. So this is where these people arguments really fall apart. And this is why I always in my videos preach not to listen to anyone. Don't even bother listening to me. Just use what I'm saying and just do your own analysis and try to come up with, like, don't listen to these random people on these message boards. Like, it has 59 likes, so a lot of people probably went in and read what he said and actually went in and bought the shares. And like, just read this post, like, it's completely wrong. Like, as I mentioned before, he's using net loss rather than cash flow from operations, which is completely wrong. So overall, so that's basically where I'm going to leave it. So make sure you guys leave a like and let me know if you guys want to see these types of videos in the future. Let me know if you guys agree with my analysis, attack my analysis rather than me. And if there are issues with my analysis, let me know and I'll completely fix them, and I'll post a new video as well. I'll see you guys next time. Thanks.